Patrick, I'm so happy to meet you and to interact with you today and the conversations that we've had. A very real way. You're an inside track to understanding how the Republican Party is working right now, especially on the policy front. I think that there's the noise and there's the signal. And I think I get a lot of what the signal is in terms of policy directions, infrastructure that is being put in place, things that will have long-term implications to the world as a result of the current administration. In fact, let's start just there, which is, if I were to ask you what would have been the most significant structural changes that have been put in place and substantive work that has been done by the current administration, what comes up to mind, top of mind?
Well, the top two are AI and digital assets. AI, the Biden diffusion rule that President Biden proposed in the summer of 2024 was to have a regulatory forward, heavy federal regulatory perimeter for each new LLM, each new model that came out. As a direct result of the election, you see that is quite open, that the market's going to be able to decide, that new models are able to be diffused across the world. As a direct result of that policy shift, you've seen this massive infrastructure build out in AI, which has given us GDP growth in the United States that we otherwise wouldn't have. That is a significant change, and should be noted as a major political shift between the Biden administration and the Trump administration. Number two, digital assets. Very similar frame. The Biden administration was quite restrictive. If you're a regulated financial in the United States, you could not touch digital assets as a matter of Biden regulators. And to go from that to bipartisan majorities on Capitol Hill under my work on legislating, and for my Democratic colleagues and friends to vote against Biden administration policy and views was significant in the summer of 2023 and 2024. Even more significant now because you have clarity of law on a payment stablecoin, and you will soon have clarity of law on the trading of the wider set of digital assets that represent roughly 90% of the value in digital assets. Those are the two most significant policy shifts between the Biden administration and the Trump administration, and most significant for us in the world of banking and financial services.
What's interesting is your ability to capture disgruntled democratic sentiments, right, and work across the aisle to create consensus. During the Biden administration, I mean, at the top, on the headline level, we see what was happening. Gary Gensler going AWOL, the lack of clarity in terms of cryptocurrencies, for example. What was happening on the Democrat side that you were able to capture in terms of the unhappiness, the desire for clarity, which is actually a representation of what the ground wanted, what the industry wanted? Right. So what do you think?
Well, a couple of things. I think I captured something that policymakers were seeking. And what you had is digital assets mature, and then you had wider ownership of digital assets, which meant the wider ownership set and a broader industry set brought information to policymakers, regardless of party. And you had more natural uptake for innovation on the Republican side in my party than for the Democratic Party. But within the Democratic Party, that's not a perfect monolith, and same for Republicans, frankly. But those that were very inclined to innovation took the extra look, put the extra work in. And so they were doing what they should be doing, which is representing their constituents. And yes, they have an ideological lens, but both parties do, policymakers generally do. But to see through the ideology, to see the potential the technology had, they then wanted to know that I could be a trusted partner on bringing what is reasonable regulatory policy. And so that was the culmination of my 20 years in Congress and building the rapport with colleagues that I'm serious about policy. I will be trustworthy as a partner. And the goal here is for us to build enduring policy, not just for the next 2 years or the next election cycle, but for a generation. And that's what we built, and that's why we had a large bipartisan majority on the digital asset bills that we brought forward last Congress that have now become law this Congress with wide bipartisan support.
Okay, and add the big business component to it.
Oh, yeah.
How did that factor in influencing you, in shaping what is it that they want, both on the AI front and on the digital assets front?
Well, it's complex. I mean, obviously, the large banking institutions are heavily involved in Washington policymaking. That's natural everywhere they could.
Yeah.
They were not major factors in the crypto debates of last Congress. They are significant factors this Congress, though. Last Congress, when I was putting in this work, they did not think of it as a threat. Nor did they think it was likely that we would achieve policy, a bill signed into law. The engagement this time around has been much more fierce, much more guarded, and much more rear-facing than optimistic from the largest the banks in the United States. I think what happens post-law for digital assets is what we saw with the Clarity Act. Once you had clear law, you're going to see large, complex financial institutions use this new asset class, not as an asset class, separate and distinct from banking, but as a part of banking rails. And I think we'll not think of digital assets as a distinct realm. Just like a generation ago, we talk about fintech. Every bank is a fintech today. We don't think of this as a separate industry. We think of it as banking. I think likewise with digital assets, it will become just a part of what we do in banking. And I think the world will be better for it. More options and bring down costs.
But Clarity Act is left hanging in the air. So
it is. But this week in Washington is a very big week. The Clarity Act passed out of the House of Representatives with a bipartisan majority, 2/3 of the House, which is rare in this political environment. And then in the Senate, it is being worked through the Senate Banking Committee, which is the committee of jurisdiction. That bill will be out of the Senate Banking Committee this week.
So they made it into the schedules.
And if I'm making a prediction, I would tell you that this bill will be signed into law about the 4th of July. For the 250th anniversary of the United States. I think it's going to be about that.
We'll hold you to that, okay?
Yes.
But the big banks have been pushing back. They want to construct a bill which works in their favor. And when you see what they're trying to protect, they're actually trying to not allow the industry to move forward. They're not exactly big fans of tokenized deposits or stable coins in that way. So how's that working out? Like, once it gets passed, I can see a number of mid-tier banks using the Clarity Act to transform the industry, as it were.
Yes.
But it's the big guys who are holding back.
Well, the big guys obviously are holding back because they see more risk than opportunity. And just as you said this, the next tier of banks sees more opportunity than risk to their current market and their current market capacity. So I think all of this shifts in a very interesting way. And I think that also becomes a model for the rest of the world, where this can be much more easily harmonized as opposed to our complicated regulatory structure in the United States. So I think the world of banking, the world of capital markets will significantly shift as a result of this over time. Not as a default. I think people think that is a light switch of everything goes to crypto rails. I don't think that's the case. I think you're going to have competition where faster, better, and cheaper is the motivator, and the durability of the product as well, right? Is this a stable platform? Is there liquidity there? And all the sort of traditional pieces here, but it'll be a more competitive landscape for sure.
Something you said today, which I think a lot of people missed, is the coordination between Treasury and the various regulatory bodies. What you're trying to suggest is that there's less independence between the different agencies, with the exception of the Federal Reserve Bank, and you suggested that the courts have suggested that the central bank should be truly independent. Although Kevin Walsh in his testimonies very clearly shows his bias, right? So, or his slant towards the Trump administration in that regard. What's happening to the independence of institutions in the U.S.? Is this greater coordination a good thing? and you actually create a system where the Treasury leads the agenda, which it's debatable whether that's a good thing or not, because then it becomes political.
Well, everything is political in Washington, but there's a level of honesty about it right now, that it is political. I think what we see now, there's a confluence of things that's happening. In American politics, in the courts, there's been a debate about the separation of powers between our three branches of government. This is a very American notion, but that debate has led to a number of lawsuits about the role of these independent agencies and who can fire them, who can hire them. Well, in our process, the president nominates and the Senate confirms for these important positions. And then traditionally, since FDR was since Franklin Roosevelt was president, these have been for terms of service. So you get nominated by a president, you then have 2, 4, 6 years, or in the case of the Federal Reserve governors, 16 years of term.
Yeah.
Can someone fire you? And the courts have ruled, yes, you can be fired. And over time, that has eroded these agencies' independence. The independence, though, has been a modern construct in the United States. For the first 150 years, that was not the notion. You elect a president, they can fire everybody in the executive branch. The courts are now going back to that regime in the United States. But President Trump has been the beneficiary of this and used it to get rid of Democratic holdovers from previous administrations to significant positions. That has gotten a lot of press. But as a substantive ideological legal debate around the notion of checks and balances between the institutions. It's very boring to talk about in an international setting, significant in a legal and constitutional basis in domestic politics. What is the net effect? It means that Treasury will be able to direct these financial regulators to implement regulatory policies consistent with the president's agenda. That is much touted by my Republican friends because President Trump is as a regulatory policy they like. It will be
a nightmare.
And Democrats are saying it's a nightmare. But this will flip with the next presidential election. What we'll see now is regulatory policy much more beholden to the presidential cycle and much more significant change between these elections, except for the Federal Reserve. The Supreme Court, I believe, will rule on an important case on the central bank, on the Federal Reserve, within the next couple of months. That ruling will say that the Federal Reserve is distinct. I believe this is what it will say. And court watchers believe it as well, that the Federal Reserve is a distinct institution and special in its nature, dating back to the Founding Fathers. We've had a central bank that has been connected with federal policy, but separate and distinct from federal possession and presidential directive, which means the Federal Reserve will remain independent, much as it has been over the last 100 years. And then the second part is that the committee, as we're seeing with the appointment of Kevin Warsh, the committee that creates monetary policy in the Federal Reserve is a committee. There are Democratic holdovers always, and Republican holdovers always, and it never quite is synced up with the presidential
it's not
elections,
into the,
which is good for sound monetary policy, and very important in this moment where we have high politics around monetary policy, and high politics related back to voter concern about how their life is affected by the cost of living and inflation. And so both parties are trying to speak to it, and then President Trump is speaking to it as well.
But let me tell you why it's of great significance internationally. Many of the countries that have got their act together economically, where politicians don't interfere with monetary policy, for example, is precisely because it took many of these countries many years to get that independence of agencies in place. And now that they got the act together, they're looking at the US and saying, the lines are blurring. It's the administration that decides anyway. So, why do we pretend for it to be anything other than what it is? Which is all very good for a mature democracy. But for a lot of the countries, it's kind of a watching brief in terms of, so how do we play it? So it is of great interest, internationally to watch how the U.S. plays it out. And in the U.S., a lot is personality driven. You've got a strong personality, you can hold it together, and you've got a weak personality, you just can't. And then it falls apart, it becomes messy, all of that. I want to touch a little bit on your career. You've had a distinguished career. You started at 29 years old, working your way in Congress. And then you went up to the heights of your profession, Speaker of the House. 22 days, is it? What made you put the pause button, and where are you professionally? Because I don't think that any one of us who know even a little bit about you would say that you've made a break from public policy, public service. What happened that made you take a step back and say, okay, I'm taking time off?
So a couple of things. I was term limited on my committee chairmanship. So that was one factor. The other factor was I decided I did not want to be Speaker of the House. So that really brought me to my question that I always ask myself, which is, can I be more effective in the next 2 years than I've been in the last 2 years? And whenever that moment hits where I don't think I could be as effective, I'm going to step aside. Made that pledge to myself in my first term, that I would reflect on it, and if I couldn't be a better contributor to the next Congress, that I would do the responsible thing and hand over the mantle of leadership to someone else. Much tougher when you actually have to fulfill the pledge you've made to yourself. And so the clarifying moment was this dysfunction we had in the US House, where a Speaker of the House was removed, and I served as the temporary Speaker before we could elect someone new. That was a clarifying moment for me that this was it. And my policy goals were going to be, some were left unfulfilled. And it's nice to see them get done, but somebody else is fulfilling that policy role. But I knew it was the right time. And being able to leave Congress at 49 years old after serving 20 years, and serving as I did, I wanted to stay still doing the work in finance and tech that I've been doing in public service. And that's what I've spent my time doing, advisory work in the private sector, still in the same space, still trying to figure out what is actually, to your opening, the signal amidst all the noise of Washington, and try to dial in on that signal and try to advise important folks and industries on how to navigate those things. It's been an interesting time post-Congress, but what I wanted is to have enough time to have a lively second career, and it's been a fun thing to embark on.
In some ways, you've kept yourself pure. You've kept yourself kosher in the sense that the Republican Party going through all that it is right now. I tried to, when I was doing my background on you, is that you see a Tea Party Republican, no. You see a mega Republican, no. So in some sense, you've got the integrity of your own position, which then enables you to be interlocutor in whatever situation that comes about. It's just a question of how that opportunity will come around. So it'll be very interesting to see how your career works.
You never have enough friends. You can never have enough friends, right? As you established with building out the Asian Bankers Association, this is an amazing institution you've put together and dreamed into existence and built.
Actually, it's not so much dream. It's you just walk the walk, and then it comes about. And in some ways, that's you. So what are you doing now? What are you enjoying working on?
What I enjoy is technological innovation and trying to adapt that to the current market. So I do some work in AI and digital assets, but finance generally, and so that sort of the confluence of tech and financial policy. That's where I've stayed. I've enjoyed that space, and fascinating to see innovators and working with startups and advising startups and helping them on this regulatory risk piece and how to read geopolitics. it's been fun to work with startups. That's been a fascinating a piece of enjoyment over the last.
And actually, from the speeches that you've given, what I get is you've now added the dimension of substance to your policy making. You actually know how the startups work. You know where the technology is going, so you take a view of that.
These things you have to keep pace with. I mean, that is the ingredient of how you stay younger, right? Which is recognizing that there's no fixed point in time with policy, with government policymakers, and there's no fixed piece with technological innovation. So you're always learning. You're always trying to stay atop of the changing events. That's what keeps. It's what really keeps us alive and keeps us going, right?